This is the Southeast Michigan market report for August, and the good news is, I guess the story for 2015 in general is the rising of inventory, available homes for sale, compared to 2014 and 13, where we had a significant shortage of listing inventory. This year it's growing. Now, it's not in every category, and the lower the price ranges, the more the inventory is either flat or slightly down. But even in that case, it's down less or flat compared to last year, down a lot. So all price ranges in all markets, inventories are either not falling as fast or they're rising. And the higher the average sale price, the more the inventory has been rising. But what was very interesting in the last couple months, both July and June, was the increase in home sales. Sales jumped quite a bit, and the reason, really a couple of reasons. One was sort of the threat of interest rates rising. That caused people to, historically it always causes people to react. I think that was a reason as well. The other is that family formations increased. The number of households increased. All of those kids have been hiding in their parents' basements for the last 8 years. They're finally being kicked out and looking to buy their own home. In many cases, those home ownership numbers are rentals, but they're also a significant share of buyers. And as inventories became a little bit more plentiful, or a little less scarce, is maybe the better word, those buyers sort of came out of the woodwork, particularly on the higher sale prices, the medium and upper end sale prices. Buyers really came out of the woodwork, in particular both June and July, because we saw the jumps in those price ranges to probably about over 10% in terms of units versus last year, where it was in the 4 to 5% for the lower price range areas. And that's true for all market areas, regardless of the average price range in that market, just whatever is the medium, low and high values in each of those markets. One of the things that's also coming back is new construction. Now, in Michigan, new construction is still half of what it was at its peak, but it is coming back, and we expect, actually, probably going forward in 2016, you'll see it really starting to pick up speed. The challenge that we have now is there just aren't a lot of lots for sale. So it'll take a year or so for lenders to lend to builders and developers to actually put in streets and roads to make lots available for building. But that's a trend that's been increasing. We think that we'll see some significant inventory jumps, availability into next year, spring and summer. We're also noticing that general activity is about the same this year as it was last year in terms of although inventory is up, number of sales are up too. We've been talking about the last couple months. There actually are more homes being sold this year than last year, and although the inventory is even higher, so the market for a typical seller in most price ranges will feel a little slower than last year. But we look at our website, which really looks at the number of people that are interested in looking at houses. We're seeing that the activity now is just as strong as it was last year, maybe even slightly higher than last year as far as number of eyeballs online looking at properties. If we look at home appreciation, it was up, depending on price ranges, anywhere the lower price range, anywhere from 4 to 5 up to 7%. Month over month, June, July of this year to last year, which are strong numbers, actually much stronger than we thought. And that is an indication of, although inventories are up, we still have a lot of buyers out there in the marketplace. Another thing that we've seen in the market, we're watching very closely, is home affordability. And with values rising, they've been rising quite a bit the last couple of years, and as interest rates start to rise, we expect to get them close to 5% into this year, into next year. What effect will that have on people's ability to buy homes? Well, the number of home sales aren't really that much more than they're still a little less than peak value in 2005 or 6 peak activity, but they're still very strong. But if you look at the Affordability Index that the National Association of Realtors publishes, which shows the ability for the median family's income to afford the median price, and 100 means that the average family can afford the average price, or the median family median price. For Michigan, we want those index numbers to be up in the 120, 130 range. That's sort of where we like to see there's some margin of error there. Right now for Southeast Michigan, it's 165, which is good. However, if rates go to 5% and values go up another 5%, that'll bring that affordability index down to about 135, which is still, that's a good market, that's a balanced market, but we'd like to see it still, again, above in the 120s to 130 range. So it does tell us that as rates rise and as values rise over the next 12 to 18 months, we'll see a market that will settle down to what will feel a lot slower for everyone, but really will be normal. So we're sort of moving towards that. Maybe it took longer to get to normal. We thought normal would be there already now. Probably looks like it'll be more like spring of next year, but that's all still good news. And overall, we're having good momentum going into the fall, as good as we did last year. So we're looking forward to some good activity. Thanks.